Welcome back, folks. It's the final stretch this afternoon for the Singapore Trading Festival 2022. Just a quick reminder that the opinions expressed by the speakers are done so in their professional and personal capacities and do not reflect those of the organizers. So we are diving right back in with some really exciting sessions. In the parallel session, which is conducted in Mandarin, Nick Fu will be talking crude oil and Singapore. 在另一边的座谈 ，Nick Fu 是有投资银行背景的课程讲师。那 Nick 他将会讨论新加坡与石油工业的联系。如果您有兴趣，请马上转台 and head over to Conference 2 right now. But over here in Conference Room 1, our speakers are going to help you identify your ideal trading profile and also find a profitable strategy for you from that. To guide us along, we have two speakers with a wealth of experience in trading the markets. Ms. Jamie Chung, the head of Singapore Warrants at Macquarie, and Mr. Philip Teo, the founder and CEO of Traderwave. Jamie, Philip, over to you.
Right. Hi, everyone. Hi, Jamie. Are you there?
Hello. Hi, everyone. I'm here.
Okay, great to see you. All right, so so what's going to happen in today's session is that I will actually start off the session. I will talk about the 3 key pillars to your ideal trading profile. I will spend about 20-25 minutes to go through this aspect, and hopefully I'll be able to help you on your trading journey. After which, Jamie from Macquarie will actually take over to share a little bit more about structured warrants and how you could actually use that to trade using one of the profile attribute that I'll be sharing with you later. So take note on that. So whatever time we have left at the end of this 1 hour, we will try to answer as many questions as possible. So if you have any questions, please head to Slido. And as usual, just post your questions there and we'll try to address as many of them as possible. So without further ado, let me just go into the screen sharing mode and get started with what I have to share with you for today. I hope that you guys are able to see. If you can't, please do let me know. All right, so today my topic is going to be about the 3 key pillars to identifying your ideal trader profile. And through that process, how to use that profile that you have discovered to actually nail down that profitable trading strategy that you can execute with confidence. Now, for a very quick introduction about myself, for those of you who are seeing me for the very first time, I was previously the Chief Technical Analyst for OCBC Investment Research for about 8 years. After that, and that was about 7 years to 8 years back, I left them and I came out to start my own company called Traderwave, where we actually focus on trading education and content. At the same time, I'm also currently a partner trading coach with SGX Academy. So for now, some of you who have actually attended SGX Academy program, you might have seen me before as well. And I also do regularly conduct trading workshops for retail traders over the past 10 years, both free ones as well as the paid workshops. And also over the past 4 years, I have actually hosted more than 70 trading global experts and mentors in the summits that we actually conducted over the past 4 years. So this is just a little bit of background so that you can understand why I'm actually so interested about sharing with you today's topic, which is called trader profiling. And the main reason is because I've spoken and I've hosted more than 70 global trading experts, and I have come to some kind of a conclusion or some kind of insights to what are some of the most important issues that most part-time retail traders are facing and how they could potentially overcome that more easily. All right, so just to share with you, if you can stay until the end of my session today, I will actually share with you this very interesting tool. It's called the Trader Profiling Quiz. I'll share with you the link towards the end of my session later on. So if you are keen to take our proprietary Trader Profiling Quiz free of charge, and also to receive a specialized 16-page detailed PDF report on your generated trader profile and how to use that to identify the most ideal trading strategy for yourself, please stay with me until the end of this entire session. All right. So now let's head into today's topic. I just want to make it very lighthearted. There's this very interesting quote that I'm sure you must have heard before, mentioned by Deng Xiaoping. What is a good cat? So he actually mentioned that black cat or white cat, if it can catch mice, it is a good cat. Now, how is this related to trading? I will share with you more later on. But let's take a look at this very interesting cartoon. I want you to identify yourself. I mean, although we are human beings, I want to identify yourself. What kind of cat do you think you are? If let's say you are in the world of Tom and Jerry. Can you take a look at this? So if you take a look at these images over here, or from what you know about Tom and Jerry, do you think that Tom is actually a good cat? Do you think he's good with catching mice? Obviously not, right? Because he always failed at catching Jerry, and he has used all sorts of methods, using hammers, using traps, trying to chase him around, trying to scare him, but he just couldn't catch Jerry. And sometimes I wonder if you actually stop to think about why. He's a cat, but why can't he catch Jerry? Because is he using the method that is right for himself to catch the mice? All right, so that's something to think about as we go into understanding what kind of trader profile you have and why it is so important to know about that. So the number one problem after hosting so many trading experts and mentors over the years and interacting with thousands of part-time retail traders like yourself, probably, the number one problem I've realized for new traders is this. A lot of times when a new trader comes to the market, what happens is that they want to just quickly put a sum of money into a trading account and quickly just find one strategy and just jump straight in and start to just trade the market immediately. All right. So what happens is that they actually try to identify some mentor that they feel they like what they see or they like the sales pitch. And then they will just go on to use that strategy, copy the exact same strategy, and then they will just try to do it. But most often than not, okay, they actually fail to execute as per the trading plan. And what happens is that they feel that they started to realize, hey, it doesn't work for me after just trying for a little while. Then they jump from strategy to strategy to strategy, and they still got nowhere. All right. So what is the problem with it? How did this even happen? Okay. So firstly, it could be a lack of discipline and consistency. It could be a lack of motivation to do what is needed to execute the plan. But the biggest problem underlying these two main reasons is that there is an inherent conflict between who you are or who the trader are as an individual and the strategy that he might be using. So think about it for yourself. If you have been jumping from strategy to strategy before, this could have happened to you as well, because the strategy that you use is something that has an inherent conflict with who you are. Right? So what's the ideal solution then? If let's say you are a new trader, you are inexperienced, and you're still trying to find your footing on what's the best way to actually trade the market. Okay, so the most important thing I've come to realize after all that I've learned over the years is that to shorten your learning curve, in order for you to be able to have the highest chance to achieve trading success in the shortest time possible, the most important thing before you go into the strategy, you need to try to identify what is your ideal dominant trader profile first. Okay, because once you identify that, things are going to be much more easier. There's going to be less conflict. It's going to take less time, and you won't actually give up that easily as you try to embark on this journey to become a profitable trader. All right. So once you identify your trader profile, the next thing that you do is to go and look for the mentor or the strategy that fit your trader profile. That would be the most optimal steps in terms of trying to become profitable. And then after that, once you have found that particular mentor or strategy that fits your trader profile, that's when you need to actually dive deep, okay, and persist with that particular mentor or strategy until you are able to do very well, become proficient. And after that, you will naturally become profitable. All right, so the importance of knowing your trader profile is this. If you do not know who you are, the market is a very expensive place to find out. Okay, think about it. You trade, let's say you do 30 trades, 50 trades, the amount of commissions that you are paying. And if you're just doing it, just trying it out, you are actually paying a lot of money and you could be losing money as well. So therefore, if you are able to know who you are, what kind of trader profile you have, find that strategy and mentor that fits your profile, and then you dive deep from there, the chances of you becoming profitable and proficient sooner will be much more higher. So what is trader profile then? I'm not sure if this might be a new term to you. I don't really see this term a lot elsewhere. That's the reason why I decided to use this, because we design and actually derive this thing from our research and from our design itself. So what is a trader profile? To put it very simply, a trader profile is really the ideal personalized trading approach. Okay, the approach, the framework that you should be using as a trader, the ideal one, that a new or generally inexperienced trader should consider adopting so as to achieve trading proficiency and profitability with less obstacle. And of course, with less obstacle, it will also mean that you will reach their end goal sooner as well. All right, so ideal personalized trading approach, a new or inexperienced trader. So for most experienced traders who are already profitable, they would naturally already know what kind of trader profile they already have. Okay, although they might not be able to explain exactly, but they know what are the things they look out for, what are the things that will actually work the best for them. Okay, so now I want to go on to the 3 key pillars to a trader profile. What are the 3 main key pillars underlying this trader profile that you should know? Okay, firstly is analysis methodology. Secondly is trading style. And third is trading horizon. So there are actually a lot more other attributes behind a trader profile, okay? But in order not to confuse, especially most of you are probably new and inexperienced as well, in order not to confuse you, these are the three key pillars or attributes that I personally find from my research that are the most crucial part and are the ones that will take up the most time. You think about it like this, these three attributes takes up the most time in a trader's journey to become proficient and profitable. So if you are using the wrong one, or any of these three using the wrong one, can you imagine the kind of rabbit hole you could be going down and going nowhere? And that's the reason why I place these three attributes as the three key pillars. Of course, there are other attributes as well, but these three, if you are able to actually nail them down correctly based on what suits you better, then you will actually spend much lesser time. You will not give up that easily, and you'll be able to achieve proficiency and profitability sooner. All right, so let's go through into these three things to understand what are the main things behind these three attributes. So pillar one, analysis methodology. Put it very simply, is mainly about using technical analysis versus fundamental analysis. All right. So generally, so this is how it looks like. Technical analysis, you are actually looking at charts, you're looking at past price history to make your trading decision. While fundamental analysis, you are using numbers, you're using financial reports and stuff to do it. Okay. So let me break down what are the key differences behind these two and how you should go about identifying which attribute might be more suitable for you. Okay. So technical analysis is generally more visual. Of course, you can use a quantitative way of doing technical analysis, but generally most people who use technical analysis adopt a more visual approach, okay? And it makes use of price and volume data, okay, to analyze the price movement trends, and mainly as a result of the actions by market participants. So from a technical analysis angle, a trader is trying to study how the market participants are thinking and behaving and reacting in the market, and through the use of visual analysis of the price and volume data and the trends in the price chart itself. Okay, so for fundamental analysis, usually is to actually look more towards the numbers, text, financial and economic data, and mainly through news and through updates to decide, okay, it has the fundamentals changed, has anything changed, and mainly traders who uses predominantly fundamental analysis will be looking more at the decision makers. That means like the company CEO or the company management or the business owner or the shareholder, the business owner, to decide what kind of things will more likely happen on a fundamental basis. All right. So generally, my suggestion is that for new traders, right? Okay, let me put it in this way. For experienced traders, okay, and highly proficient traders, generally, it is actually ideal to use both together. Okay, that would be the best combination. However, what I realized is that for most new and inexperienced trader, it will be too much to handle if you do both at the same time. So that's the reason why usually I suggest for new or inexperienced trader, you should ideally choose one that will be a better fit for you first, and to dive deep on it and become very good in it before you even look at the other one. Okay, so for experienced trader, they are usually using both at the same time, but for new trader, I suggest just focus on one, and that's the reason why we have this trader profile to help you understand whether you are more suited to look at technical analysis. Consider using technical analysis or fundamental analysis as the first analysis method that you should be diving deep into. All right, so I just want to quickly share this quote to let you understand about how important technical analysis is and how it can actually work. So Bruce Kovner, a $10 billion hedge fund manager who generated 87% over 10 years, he actually mentioned this in this very exclusive interview in this book called Market Wizards before. A highly recommended book, is the de facto book that you got to read if you are serious about trading at all. So in that book, he actually did a very rare interview. He actually mentioned this. For me, technical analysis is like a thermometer. Fundamentalists who say they are not going to pay any attention to the charts are like a doctor who says he's not going to take a patient's temperature. Of course, that will be sure fully. If you're a responsible participant in the market, you always want to know where the market is, whether it's hot and excitable or cold and stagnant. You want to know everything you can about the market to give you an edge. And technical analysis reflects the vote of the entire marketplace and therefore does pick up unusual behavior. So this is what one of the most established and legendary hedge fund manager has got to say about the use of technical analysis. So I hope you understand how important technical analysis itself is. And who else but Benjamin Graham, the author of Intelligent Investor and Warren Buffett's mentor. And this is what he has got to say about the importance of fundamental analysis. The stock investor is neither right or wrong because others agree or disagree with him. He is right because his facts and analysis are right. So the reason why I show you both these quotes is to actually help you to understand is that when a new and inexperienced trader try to learn both at the same time, you might actually discover that both of these actually has some kind of conflicting teachings. Okay, if you are already experienced, you know how to navigate the conflicts. Okay, but if you are not learning both at the same time, it's going to cause you a lot of conflict. You'll be asked to do something in technical analysis and asked to do the opposite in fundamental analysis. And that's one of the most important reasons why, as a starter, you need to just stick to one. Okay, I'll share with you how to know whether which one is more ideal for you later on. Let me go on to the second pillar, which is trading style. What exactly is trading style? This is how I define trading style. Either it's a decision-based style or it's a rule-based style. What do I mean by that? Mainly, are you mainly using your brain to analyze the market to make a decision? Or are you using very specific rules, quantifiable rules, like through the use of computer to help you generate trading signals or trading ideas to base your trading decisions on? Okay, so again, decision-based style or rule-based style, usually for most traders, even experienced traders, what I've come to realize after hosting so many traders is that usually they will typically stick to just either one. So imagine this, if you go down the wrong rabbit hole, which is not ideal for you, can you imagine the amount of time that you have spent, the money you have lost going down a wrong path when the other path could be right for, it's more likely a better path for you. Okay, so decision-based style versus rule-based style, what's the main difference? So for decision-based styles, it's mainly discretionary, which means that you are using a certain framework, a big picture framework, and to analyze the market. And then when you analyze the market, you will come to a discretionary decision whether that this is a good trading idea, whether I'm going to take this trade right now and stuff like that. Okay, so it is really more about using your feelings and intuition and your instincts about the market. The outcome is that for decision-based style, if you are proficient in this style, usually you will be much more responsive to the market changes compared to a rule-based style. Okay, so rule-based style, what is it based on? Okay, it's usually systematic or algorithmic. It's based on a certain quantifiable rules where you, let's say, for example, when X and Y number happens, then I will buy, that kind of thing. So systematic is that you will use it to generate trading ideas and then you manually execute the trade. For algorithmic, is all the way from analysis, analyze, make trading decisions to executing the trade is entirely through the computer and through the rules itself. Okay, so for rule-based, it's mainly based on facts, calculations. So in a way, it is more reliable. Okay, why? Because once the rules are set, unless you change the rules, then it will just keep on being very reliable, following the rules accordingly, depending on how the market condition changes. So it's more reliable, but it will be less responsive. For example, if let's say a bear market suddenly comes, a rule-based style usually will be slower to actually see that, and you will incur significant losses during a sudden change of market condition. All right. So what I want you to understand is that all the three pillars I'll be sharing with you, the two different kind of minor attributes within each pillar, both have their advantages and disadvantages. So you need to use the right one that is a good fit for yourself, then you will have the highest chance of success. Okay, so Jesse Livermore, one of the greatest trader of all time. Mainly, he's a discretionary decision-based trader. So he mentioned this before, the pockets change, the suckers change, the stock change, but Wall Street never changed because human nature never changes. And this is one of the most important beliefs and philosophy that a decision-based trader usually needs to be very firmly grounded in, to understand and believe that human nature never change, and you will have a way to actually analyze the market participants and make a decision from there. So for rule-based trading, one of the most famous trader, Richard Dennis, a legendary systematic trend-following commodity trader. So he actually said it before, I always say that you could publish trading rules in the newspaper and no one would follow them. Imagine this. And he is one of the best traders in the whole world. And the key is consistency and discipline. Almost anyone can make up a list of rules that are 80% as good as what we taught people. And when what they couldn't do is to give them the confidence to stick to those rules even when things are going bad. Okay. And this is the reason why it is so important that the kind of strategy you use, the kind of trading style you use should be a good fit to you, to who you are as an individual. Otherwise, you don't have the confidence to stick to those rules. Okay. And that's the reason why doing a trader profiling on yourself is so crucial. Okay. Now let me move on to the next pillar, which is pillar 3, which is trading horizon. Long-term horizon versus short-term horizon. This is also something that a lot of traders keep on jumping from long-term to short-term to long-term. They can't find exactly which one they should stick to. So ideally, again, you should stick to either one at the start. Okay, and experienced traders, they usually have different strategies that cater to long-term and different strategies that cater to short-term. But again, as a new trader, just stick with one, become good in it before you move on to the other. Okay, so long-term horizon means usually you hold on to a trade for weeks to months to years. For short-term trading horizon, you are usually holding on to a trade usually for minutes to hours to maybe days, for example. That's what we call the short-term horizon. Okay, so let me just quickly share with you a quote by Ed Sekoda, which is a very legendary commodity trader with 60% per annum return over 30 years on average. On average, 60%. He is a long-term trend follower. And this is what he has got to say about the importance of long-term. Is that the importance, in order of importance to me, are the long-term trend, the current chart market, and picking a good spot to buy or sell. Okay, so this is what a long-term trader usually will focus on. Okay, and long-term trader, there are some attributes I will share with you that is important to why long-term might be more suitable for you instead of short-term. So a lot of times people want to do short-term trading because why? They think that you can make money faster because you are doing short-term, but it doesn't necessarily mean that will be profitable for you if, let's say, you as an individual is not suited to do short-term trading. Okay, but nevertheless, let me just quickly share with you one quote from Mark Minervini, one of the legendary short-term swing trader who won 2021, which is just last year, record-breaking 334% one-year return using a real money $1 million account. Okay, so he actually made over 300% using short-term trading, and this is the reason why short-term trading attracts a lot of people into it. Okay, however, again, if you as an individual is not suitable to do short-term trading, then you will end up losing a lot of money for sure. Okay, so with that, 3 key pillars, okay, which is the trading horizon, the trading style, as well as the analysis method, which are what I find are the key attributes that new traders should understand and more or less understand themselves and the ideal attributes that they should be fitting in first before they dive deep down. So with that combination, we came out with 8 different trader profile types, which is as what you can see over here. So all of us as traders, you will definitely fit into either of these 8 profile types. All right. And of course, you can take your time. Most experienced traders, they take many, many years before they even realize what kind of profile that they actually have. They make a lot of mistakes. They lost a lot of money. They did short term, then they go long term, or they did technical analysis, then they go fundamental analysis, or they go discretionary decision-based trading before they go into systematic trading. After a lot of trial and error, then they realize, oh, so this is my final trader profile. But I want to help you shorten that learning curve. Okay, and that's the reason why we actually we took a lot of pain to design and build this trader profiling quiz, where we can help you identify through your personality, your talent, and your lifestyle, and to find that breaching or that point of fusion to identify what is the most ideal trader profile for yourself, so that you can decide, okay, this is my trader profile, therefore my strategy should be related to the trader profile that I have. Okay, so this is the trader profiling system that we have actually built. So let me just quickly run through with you what does personality, talent, and lifestyle means. Personality is basically what you enjoy doing. Just imagine this. If you have to do trading, it would make a lot of sense if you enjoy a particular style, a particular horizon, or a particular method more, right? Then you will, if you enjoy it, then you actually perform much better. Okay, so that's why personality is actually very important in terms of identifying your trader profile. The other part is your talent, what you are good at. So a lot of times what we are interested in doesn't mean that we are good at. Okay, but identify what you are good at. Like, for example, Usain Bolt, he focuses on just 100 and 200 meters. Why? Because his muscles, his talent is running short distance, not long distance. So you can think about it. Your talent could be trading short term, but not long term. All right. So what you are good at doing. And finally, the lifestyle, what you are used to doing. Lifestyle might not matter so much for full-time independent traders. That means traders who are trading for a living might not matter so much. But for part-time retail traders, this is extremely crucial. If your lifestyle is not suitable for the kind of trading that you do, then your trading is going to conflict a lot with you. So therefore, lifestyle is a very one of the main important criteria in terms of identifying your trader profile. Okay, so therefore we designed this trader profiling quiz. It's just a 3 to 5 minutes quiz that you can take a total of 18 questions, multiple choice questions, where you'll touch through the different parts of your personality, talent, and lifestyle. And if you just answer them honestly, okay, within these 3 to 5 minutes, the quiz will actually generate for you automatically the ideal trader profile for you, and also with a strength score as well to let you know whether this profile is has a very high strength score or low strength score. All right. So high strength score usually means that both in terms of your personality, talent, and lifestyle, all is telling you that this particular trader profile, LTD, for example, is very, very ideal for you because you have a pretty high strength score. Let's say, for example, you have a strength score of 8 to 10. It means that all your talent, your personality, your lifestyle tells us, okay, that LDT is the most ideal trader profile for you. Okay, if you have a score of about 0.4, it means that there are some actually conflicts between your personality, your talent, and your lifestyle, and that's why your strength score might be lower than what you prefer to have. Okay, so once you take this quiz, you will also generate a 16-page trader profiling report for you to dive deep with you on what this particular trader profile that is suitable for you. Things like, for example, what your trader profile strength score is telling you, what are the three keywords about the kind of profile that you have, and about the trading horizon that you should be focusing on, the trading styles, as well as the analysis method, as well as what are the disadvantages and the advantages of the kind of profile that you have been determined to have, for example, and how to go on to move on to the next step to grow your account with this kind of trader profile that you have, the kind of strategies that you should be focusing on, the things that you need to take note of, and what's next once you identify your trader profile. All right. So today's time I have is very short, and that's the reason why I can only touch on this much. But what I can suggest for you is to go and take this quiz. And you will be able to identify, actually, we would actually generate out the entire 16-page report for you to tell you, after you have answered truthfully in that 18 questions quiz, we'll tell you what is the most ideal trader profile for you and the strength score as well to see whether it is a very good fit for you. So if you are keen to take that quiz, please head to twv.1/SGX quiz. It's entirely free of charge. The quiz is free. The PDF, detailed PDF report is free as well. So just go and do it and know your trader profile before you go and decide what kind of mentors to learn from and what kind of strategy to dive deep into. All right, so my time is up. I'm going to pass you over to Jamie. So remember just now in the trader profile, I talked about short-term trading, right? So if you do identify yourself in time to come after you take the quiz that short-term trading might be more ideal for you, and this is where structured warrant could potentially help you in terms of the asset class that you can potentially trade on SGX to take advantage of the short-term horizon trading profile that you might have. All right, so that's it from me. For now, I'm going to exit screen share. Jamie, over to you. And once Jamie is done with her part, I will again come back to do a Q&A together with Jamie to answer any questions that you have. All right, so Jamie, over to you right now.
Thank you, Philip. Oh, wow, I love free stuff. So I guess I'll be trying out that quiz for sure. And it's got 16 pages of report. So I feel like it's going to be quite worth my time. So good afternoon, ladies and gentlemen. Thank you for your attention over the last 25 minutes. As a way of rewarding your further attention for the next 15 minutes, I'd like to offer you the chance of a $25 giveaway voucher on the condition that you have to stay with me till the end of my very short presentation to find out how. For now, allow me to show you a short-term or swing trading strategy that can make you leverage returns with a smaller amount of initial capital. My name is Jamie from Macquarie Warrants, and I'm here today to tell you more about warrants. Now, there's no better way to learn about warrants than to see how they are performed in the real world, correct? So I'll be showing you different examples, real life examples of how investors can use them intraday over a 3-week period, or how an investor could have invested in them over the past month. Now, one of the types of traders is the day trader or scalper. He or she enters and exits on chart points, and they are in and out as long as target levels are reached. The target levels are typically narrow and easily attainable during the trading day, provided your view is right. So let's use a hypothetical example where day traders were looking at the Hang Seng Futures Index on 18th of March. So here on the screen, you can see the chart of the Hang Seng Futures Index on 18th of March. And those who saw that the Hang Seng Futures had traded to the 21,000 level, if they felt that this was a key support level, they may wish to enter into a bullish position and buy into the futures index. And then perhaps intraday look to take profits at a 21,500 level, a level that the Hang Seng futures was resisted just a day earlier. So these are some of the, I guess, hypothetically, these are some of the thoughts or train of thoughts that a day trader might have, the entry and exit levels. Now, for such day traders, they can either directly trade the Hang Seng futures, or they can consider instruments such as warrants that provide leverage. Apart from warrants, there are other listed leverage products available to investors in Singapore, which we have included in examples for reference. So with warrants, those who think that the stock or market is going higher, you will consider call warrants as they generally move in line with the underlying share or index. Those who think that the stock or market is heading lower can consider put warrants as these move in opposite directions from the underlying. So they increase in price when the underlying stock or share underlying stock or index falls. Now on 18th of March, if day traders had directly bought the Hang Seng futures based on the entry and exit levels, they would have made 2.4% in 3 hours, right? Entering at 11:49 a.m. where the Hang Seng futures was at 21,000 and exiting at 2:20 p.m. when the Hang Seng futures was at 21,500. However, if they had entered via a Macquarie Hang Seng call warrant Y4CW, which costs 11.3 Singapore cents, they would have made 22.1%. Now, ladies and gentlemen, that is 9 times more than the 2.4% return on the Hang Seng futures trade. And this is one of the most attractive features of a listed leverage product, the gearing that they provide. In the case of warrants, the magnified move that you see is due to the effective gearing feature embedded in warrants, which enables them to move in greater percentages than the underlying shares or indices that they track. However, it also means that if investors had gotten their view wrong via these geared instruments, their losses would also have been magnified. Listed on the SGX, structured warrants can be traded through your stock brokerage account, just like how you trade shares. So warrant issuers like Macquarie, like us, we provide you buy and sell prices along with buy and sell volumes to ensure that you can easily enter and exit from your warrants. Now, to see how warrant bid and prices are priced during the day, there is a live matrix tool that you see on the screen now that shows investors exactly where warrant prices are priced alongside the underlying stock or index live. So using this live matrix, you will be able to know the exact price to enter and exit on the warrant based on your underlying target levels. So you do not need to have a target level on the warrant, only on the underlying. And via this live matrix tool, you'll be able to see exactly where the warrant prices will be based on your target underlying levels. Now, moving on to the example of swing trading, a popular trading profile or strategy. Like day traders, swing traders rely heavily on technical chart points and indicators. However, their target entry and exit levels are typically wider apart, and they can take a position over days or weeks and months. So using another type of hypothetical example of a swing trader, assume this swing trader has been watching the Singapore banks, which in late February, just last month, erased close to half of its 20% gains attained since December. So it fell 20% in 2 months. Now, such moves would have gotten the attention of most Singapore investors. You would have heard it all over the news. And over here on the screen, you see that the moves were highlighted in Macquarie's daily newsletter on the 2nd of March. Looking at DBS, swing traders may perhaps have found the entry level of $32, denoted by the first red line at the bottom here. They might have found it an attractive level after a 25% correction in its upward trend that actually began in March 2021. Okay, they may then set their target exit level, when they do get in at $32, they may set it about 9% higher at around $35, where the shares last appeared slightly resisted before it fell, as it fell, I should say. Now, swing traders with such a view could either have directly bought DBS shares and made a good 13% profit after a 3-week holding period, by entering into DBS at $31.91 on 7th of March and exiting, above $35 on 28th of March. Okay, that's 13.3%. Now, you could either have done that or you could have traded in a listed leverage product, which would have generated geared returns. Here you can see that the DBS call warrant in this example generated 217% over 3 weeks. Now that is 16 times more than the 13% return in DBS shares over the same period. At the same time, the DBS call warrant cost just 4.6 cents compared to the DBS shares at $31.91 at the point of entry. When you buy and hold listed leverage products over for more than a day, okay, investors have to pay holding costs compared to day traders, right, who do not hold a warrant and they enter and exit during the day. Now, when you buy and hold for more than a day, the holding costs can increase with the holding period. So depending on how long you hold, the longer you hold, the more you pay holding the listed leverage product. In the case of warrants, holding costs are known as time decay, where the price of the warrant decreases with time. As such, when a stock is unchanged or moving within a very narrow range, the warrant price will be lower with the passage of time. However, in this example here with DBS, you can see that the warrants are still able to generate 217% returns despite the holding cost of time decay over 3 weeks. So to estimate how warrants will perform, given your profit target level in the related underlying, it could be DBS or any other underlying, UOB, OCBC, you can use our warrant selector tool here, which will show you how various warrants over DBS or underlyings will perform over your target holding period. So you can just, on this selector tool, put in your target profit level, okay, and your holding period here. In this example here, it's 4 weeks. Okay, you can move it around. And this selector tool will show you how much the warrant will fall due to time decay in the event that the underlying is unchanged, if you keep it unchanged over the target holding period. In this case, you see the estimated returns on the various DBS warrants or Hang Seng warrants, okay, depending on the target level that you have placed, in this case 5.7% over 4 weeks. So this tool is very useful for that. Now here are more examples of how listed leverage products in Singapore have performed for swing traders who this time took a view on the very volatile Chinese names listed in Hong Kong in the month of March. As mentioned earlier, call warrants move higher with the underlying, while put warrants move in the opposite direction with the underlying. Thus, when Galaxy Entertainment and Alibaba Holdings overcame their 20 to 30% losses in the early part of March to finish 7 to 8% higher for the month, okay, the call warrants generated returns of 38% to 47% in spite of the time decay over the 1 month period. Now, of course, if you had bought put warrants instead, okay, they would have fallen 20% for the month. In other examples here, swing traders who took a bearish view on Chinese shares listed in Hong Kong in the month of March and bought put warrants would have seen gains of 15% to a whopping 800% after some of these shares fell as much as 16% in the case of JD.com. So indeed, put warrants can either be used as a form of hedging tool for existing shareholders or shares that they fear will fall in the short term, or simply as a trading tool to potentially profit from short-term pullbacks in the stocks or indices. Now, in all the examples we've used, you will notice that warrant traders or investors should always, first of all, consider their target entry and exit levels in the underlyings and act based on that. Okay, using the live matrix tool, you will see where the warrants will trade based on these underlying entry and exit levels. So again, you do not have to make a target entry and exit levels on the warrants. Okay, you use the warrants to trade your target entry and exit levels on the stock directly. Okay, secondly, the holding period must be considered. Choose a warrant that expires later than your holding period, not before. And thirdly, while warrants are geared instruments that provide magnified returns, as we've seen from the examples, note that each warrant has a different gearing level. The higher the gearing, the higher your risk. So choose a warrant with a gearing level that you're comfortable with. Okay, if you're not comfortable with your warrants falling 50% over your holding period, then choose one with a lower gearing level. So in the case of say DBS falling 1% against your view, choose one with a gearing of less than 50 times, so that your warrant doesn't fall by 50% when DBS falls by 1%. Last of all, as a swing trader, you must always consider and select a warrant that isn't trading on wide spreads. Same for stocks, you wouldn't be trading one with a very, very wide spreads. And in our warrant selector and warrant search page, you'll find that each underlying will tend to have a focus or trending warrant marked with a fire logo here. Okay, and these are warrants that are typically on the tightest warrant spreads for the underlying that you're interested in. So, like I said, choose a warrant that's on the tight spread. And for easy reference, you can go to our warrant search table or even the selected tool that I talked about earlier. They will have a fire logo, to tell you that these warrants are on the tightest spreads. Finally, with every leverage product, investors should be aware of the risks of investments involved. So remember, warrants are suited for trading a short-term move or expected volatility in the stock or underlying in the coming months. Okay, the warrants, they come with expiry dates and are thus very different from buying stocks where you can hold for years. So if your view is one where you intend to hold for years and therefore you're probably not a short-term trader, but one who takes a fundamental view or a longer-term investor, then you will probably want to directly trade in the stock. But if you're a short-term trader, if your profile comes out as such, after you take Phillips's quiz, you might want to consider warrants, which are great for trading the short-term moves or expected volatility. Now, and with that, I've come to the end of the presentation. I hope everyone has had a better understanding of warrants and how to trade them. Do visit our warrant website at warrants.com.sg. or join either of these social media channels on the screen now. I've provided the QR code. You will stand to win a $25 voucher that I promised at the start of the presentation, when you look out for a contest in the next few weeks, where you only have to answer 2 questions. It's very easy questions to win. But before that, you have to scan and join one of our social channels in order to participate. What will you see on our channels? Breaking news that we hope to bring to you amidst your very busy schedule during the day. You will see them on our Telegram channel, for example. You will see that we reported in March, about the Chinese authorities and their comments to stem the market rout. And we also highlighted when DBS tumbled more than 1% in 10 minutes, to a key support level, stuff like that. So do join, scan any of these QR codes, or if you're not able to scan it because you're using a mobile phone, visit the Macquarie virtual booth after this session to scan and join. And with that, thank you very much for your attention, and feel free to ask me any questions on warrants during the Q&A session. Thank you.
All right. Thank you, Jamie, for the wonderful talk. All right. So I'm looking at the Slido right now to see what kind of questions that you guys have for us. So I think immediately there's one question for you, Jamie. Maybe you would like to address that first. From Jeffrey Lee, is there any difference between warrants and options? And if there is no difference, can a warrant seller either put on put and call side? Would you like to answer that question first?
Yeah, sure. Well, thanks, Jeffrey, for the question. Now, warrants and the difference between warrants and options. So what are they? I think, first of all, with options, you will find that there is no market maker typically, right? Actually, there is no market maker at all. Options are instruments that are listed over the counter, and anyone could be a buyer and seller. Now, even if you're interested to buy, but if there was no seller for that option structure that you're looking at, say over DBS, right, you can't buy. But with warrants, there is a designated market maker such as Macquarie, whose role is primarily to provide warrant bid prices as well as volumes for you to easily enter and exit. And also they are listed on the SGX rather than over the counter. So you can easily participate in them. So I would say that is the biggest difference. And the other big difference is obviously with warrants, you can only buy and sell all of it. You can't do a naked short. You can't decide to list your own warrants and just sell unless you become a designated market maker as well. Okay, but with options, you can just list an option and sell. If you like. So warrants are really just more like shares, you know, when you buy and sell, whereas options, you know, you can easily just sell without owning anything, right? But with that, your losses are unlimited, okay, for as long as your view is wrong. With warrants, the maximum loss that you can make is the small initial capital that you placed up front. So if the shares keep falling against your view, you do not have to top up, you know, your margin account as you would have to with options, right? And rather, if they become worthless at expiry, there's nothing, no top up or anything like that you have to do. It will just become zero, and you lose the initial capital that you placed up front, the amount that you paid for the warrant. Hope that answers your question, Jeffrey.
I hope so. I don't think you'll be able to answer anyway. But I think it's a pretty extensive elaboration and explanation. So I think he should more or less be able to understand already. Otherwise, it's quite easy to actually find out more information online as well. All right, so let me just quickly move on to one question, which I think probably is for me from Ko Huang. Philip, can you please elaborate on momentum trading? How does momentum trading differ from short-term trading strategy? Okay, so I think there are a lot of terms out there about trading. You have probably heard about things like momentum trading, swing trading, position trading, or trend following. Okay, so some names like that actually caters more towards the analysis and the decision-making part. Some caters more to other aspects, like let's say, for example, short-term trading strategy, right? Short-term trading usually means the time that it takes to actually execute and realize an entire trade before closing it. So let me just give you an example. So let's say, for example, momentum trading, right? The word momentum, what does it mean? Momentum means that usually a movement has to start first before there is a momentum. Okay, so as a trader, if you are into momentum trading, the strategy that you use usually would typically be more like technical analysis related, because you want to see that the move has started to reverse and started to change in the other direction already. And that's when the momentum is starting. And that is the point where you actually get into the trade in the direction of that momentum. So that usually means that it's more of an analysis method or a trading strategy. But momentum trading doesn't necessarily mean it has to be short term, okay? Because momentum happens on a longer time frame as well. Let's say, for example, a stock, for example, the price has been falling persistently for the past 1 to 2 years, for example. That's long term, right? But at some point at the end, towards that 2 years, the company came out with a new product that is very innovative, and it is starting to pick up more sales. And what you see is that the price of that particular stock started to bottom out towards the end of the 2 years, and then it started to turn back up again. And together with this good new innovative product that he has just launched, it seems like the long-term momentum for the price movement of that particular stock is starting to go on the upside as well. So momentum doesn't necessarily mean that it has got to be short-term or long-term. It can be both short-term and long-term, as long as that momentum suggests that there is a change of direction and the direction is already emerging in the direction that you are looking for. That's when you get into a momentum trade. Short-term trading usually means that you enter a trade and you exit the trade usually within minutes, within hours, within days, for example. That is how usually we will classify as short-term trading. All right. So I hope that answers your question on that, Ko Huang. All right. And I think there's another question by Peng Sun, right? What are the fees? I think this should be related to Jamie. Would you like to answer that? I'm not sure whether you addressed that.
In fact, thanks, Philip. In fact, I'd like to address quite a couple of questions together. I think Kunaf asked which are the best warrants to trade on SGX. I'm not sure if you're referring to the stock SGX or warrants in general, but I can easily answer that. I would also like to address Charlie's question on how do we select a warrant. You know, I see many Greeks, which is more important, and what are the criteria to look at, and finally, what are the fees involved. So I will just quickly share my screen again in order to answer these questions. Okay, can you see my screen, Philip?
Not yet. Yes, now I can see.
Okay, so just very quickly, how do you select warrants on SGX, right? I assume that's relate, on the stock, or if you are talking about warrants in general, I'll show you that as well. This is the selector tool I told you about. This is the best warrant website you can find in the world, I think, warrants.com.sg. You can come here, warrant tools, drop down to the warrant selector, you end up in the selector. Now, if you were wanting to select SGX, for example, you do a drop down, you can type SGX. And if you're bullish, you choose a call. If you're bearish, you choose a put. Assuming we're bullish on SGX because they've held this wonderful trading festival, and hopefully that spurs trading on the burst. Again, we have a bullish view on it. We can look at the chart and see where our target level is. So assume that we think it will go up to $11. We can do like a 10% projected returns. You can hold for a week. Okay, and these are the warrants that are available, call warrants available over SGX. And how do you select it? You can either go with a fire logo, like I said, because this warrant, is the warrant with the tightest spreads. But if another warrant interests you, like this warrant, based on the percentage returns, you can also choose it. So this tells you if in 2 weeks' time, SGX does go up to $11.03, you would stand to make 58% when you buy this warrant. Okay, but if it takes longer, let's say, 4 weeks, 5 weeks, maybe 10 weeks, right? 10 weeks, okay, you would make 46.5% buying this warrant here today at 10.1 cents, and it will go up to 46.5% in 10 weeks. So this is how you could select a warrant, and it could be any warrant. Kunaf, going back to which are the best warrants to trade on SGX, I would say there's no best. It's only which is your best view, the view that you're most confident in, and you would think will be realized in the short term. Generally, Hang Seng warrants are the most popular. Most popular warrants in the market. They trade quite actively. So as such, you find that whether it's a call or put, whether you have a bullish or bearish view, there are a lot more warrants for you to select. Okay, so here you can select. Now, Charlie, how do we select a warrant? I hope this tool answers your question. We built this tool as a way for investors to easily select a warrant. There are many Greeks you talked about, right? And it can be quite scary. Greeks, it's probably something that option traders are familiar with. Your Delta, your Vega, and all that. I mean, it sounds like Greek, right? Because it is Greek. And you don't really need to do that. And that's why I didn't cover that in my presentation. Really just, 4 steps here. Have, most importantly, your view on the underlying itself. Where's your entry and exit level? A lot of people enter and don't know where to exit. And that's terrible, because where you can actually take your profits, you don't take it, right? Because you don't have an exit level, or you don't have a cut loss level. So I think 1, have the view on underlying entry and exit, and then 2, have an idea of how long this period that you want to hold for, because you think there could be a short-term move because the results are going to be announced soon, right? In a month's time, and you want to be positioned maybe 2 weeks before. Then your holding period is probably going to be a month. Don't if it doesn't realize in a month, it probably is not going to move on the results that you're expecting, right? Because you kind of stocks kind of move quite quickly on events when you're a short-term trader, okay, or on news, where the war escalates and you're worried, you want to buy a put warrant. Yeah, you have your entry exit level, have your holding period ready, and then from there you can use this tool to easily select your warrant. Like I said, if they have an effective gearing level, they all have levels, okay, and if it scares you, something that goes up by 120% here, can go down 120% as well. Actually, no, they won't go down 120%, just 100%, right, to zero, if it's going to expire soon. And if that scares you, then don't pick that warrant. Pick a warrant that that has a lower gearing, that might not move up as much, but it will not fall as much as well if your view was wrong. Now on the fees, what fees are involved is exactly the same as trading stocks. So it's just based on your brokerage account, which depends on which broker you trade with. And yes, it's based on the amounts of capital, the depending on your size of the trade, right? So it can vary from persons to persons, but it will be the minimum commission that you pay to the brokerage and a minimal trading a fee on SGX. We don't collect any of these fees. It's just like trading shares. It's payable to your broker and to the exchange. I hope that answers your question. Now, Wendy, who waited for me to do my presentation, has a question, so I have to answer this, Philip. Is there a difference between a company issue warrant and those launched by issuers like Macquarie? Yes, company warrants are issued directly by the share company, yeah? Okay, for you to participate, it's a form of corporate action. So it's for you to participate directly in the shares of the company, initiated by the company. But warrants, structured warrants, right, which is what we call ourselves, structured warrants that are listed by Macquarie are different in that sense that there is a market maker, okay, providing the bid and offer prices that moves along with the shares. Okay, and they are basically listed by Macquarie so that investors like yourselves, Wendy, or and everyone else can participate in the moves of the underlying at any point in time. Okay, whereas company warrants are only issued by the company if they decide to issue, right, as a corporate action. Okay, so I would say structured warrants are really just more like shares, where they give you a tool to trade the moves in the share over a short-term period and where you want geared returns, whereas company warrants do not provide that. And then finally, Charlie, how do we use warrants in momentum trading, and under what circumstances do we select out the money, in the money, and the money? Again, Charlie, rather than go into in the money and the money, out the money, actually, there is no better warrant. People always think it's good to select a warrant in the money because the strike price is below where the shares are, and it's great. But anything that's in the money can become out of the money if your view was wrong. Anything that's out of the money can become in the money when your view is right. So I'll say the first and foremost view is always that you're correct, and your entry and exit levels, really. So it doesn't matter, whether they're in the money and the money out of the money, it doesn't matter. It affects the risk of the warrant, which I said is available for you to see, how risky the warrant is. You look at basically the effective gearing level, and that can be seen on our website. They have various effective gearing levels. Okay, and then how do we use more warrants and momentum trading? I think my presentation, I provided some examples of swing trading. Unfortunately, I'm not an expert in technical charting like Philip. So maybe you can ask Philip what is an example of a stock in momentum trading that you can undertake now. Perhaps, Philip, if you're up for such a question to answer, thrown by me in conjunction with Charlie, then if we have a warrant available over it, then Charlie, you can use that view to get in and out of the warrant.
Yeah,
Philip,
so under normal circumstances where I have more time, I will definitely try to take a look at charts and try to run through some of those charts to share how I actually go about analyzing and making trading decisions. Unfortunately, we are left with only 2-3 minutes, and it would be terrible if I were to do it halfway and we have to cut off the whole thing itself. So I think more or less most of the questions has already been asked. Although there's one question, give some specific examples of trading. I have no idea how to answer this question at all because it is too generic a question. So I think more or less the questions that we are able to answer, we have already answered, and I don't see any more new questions coming in, and time is almost up as well. So I suppose that's we are done with our session for today. Do you have anything else to add in, Jamie, before we hand it back to Edward?
No, but I would say, okay, look, don't be disappointed, Charlie. If you're interested, go and take the quiz, the free quiz by Philip, and then I think he might have some webinar sessions to introduce his courses. I've been to some of them. So I think that's when you can look out for some of the stocks or indices he might mention on momentum trading.
Yes, exactly.
Yeah, you have more time.
All right, so thanks for the advertisement, Jamie.
I
so
think
do
it
check
would be
out.
good for Jamie to flash the $25 promotional QR codes again.
Yes, I can.
We've got a couple of minutes.
Okay.
Yep. And for those of you who has not taken the quiz and you would like to take and you didn't manage to capture that slide just now, the link has been posted in Slido as well. So just hit to Slido and click on the link. You can take the quiz from there.
Yes, real quick, folks. I actually went and took the quiz myself just now. It's quite fun too. All right, so do check that out. That's from Philip's side. And on Jamie's side, we're not seeing it right now, but you can get $25 vouchers just by joining the socials. All right, so let's get that up on the screen, folks. Yeah, so scan these QR codes now. Be one of the first 100 and you can receive $25 vouchers. That's a pretty good deal, folks, for what a lot of people consider historically, I mean, it's not 100% confirmed, but historically one of the strongest months of the calendar year for markets. So April, this might be a good way to start it out. All right, so scan the QR codes. Take that quiz from Philip. I want to thank again our speakers, Mr. Philip Teo, CEO and founder of Traderwave, and Ms. Jamie Chung from Macquarie, head of warrants over there. Thanks, Philip. Thanks, Jamie.
Thanks,
Thank you.
everyone.
Bye.
Thanks, everyone. Cheers. Take care. Good luck with markets.